Good afternoon, everyone. How's everyone doing? Yes? All right, getting through the 3 o'clock hour. I'm Vanessa Pestritto, and this is the Mainstream Adoption Consumer Crypto Panel. I'll let my fellow panelists introduce themselves, but I'm Vanessa Pestritto of Electric Gems. I help build market credibility for Web3 projects in the form of product go-to-market and token go-to-market. I'm also an investor where I delightfully got to make a handful of investments last year, and they're doing well. Please.
Hi guys, my name is Caitlin Cook. I'm the head of growth at Moonwalk Fitness. Moonwalk is a fitness accountability app built on Solana, basically using the financial incentives that crypto supports so well to hold people accountable to moving more daily to live better lives. Prior to this, I was working in the Solana ecosystem on a DeFi protocol with some local Chicago traders on derivatives infrastructure, and prior to that worked in finance in Chicago as well. So happy to have a crypto event local to the city.
Hello, everyone. It's a pleasure to be here. My name is Jana. I'm co-founder of KIKI. My background is in building consumer brands, so I was very lucky to be a part of a few $0 to $100 million projects that are global beauty companies. And we started KIKI with a simple observation that the next generation of multi-hundred million and billion dollars brands is going to start on the internet. It's not just going to use the internet to sell. And therefore, everybody on the internet should have the ability to co-create and co-own what they're using and what they're selling. And so today, KIKI is a commerce protocol. We were originally backed by Estee Lauder, and now we're in the crypto world with Paul and Decasonic and Andreessen Horowitz. And we're really very excited about tokenizing the future of commerce so that you can all participate in the upside of the products that you love and experiences that you love.
Hey everyone, I'm Justin Vogel. I'm co-founder of Safary. Safary started the growth ecosystem in crypto, first with a community called Safary Club, which is the most exclusive network of crypto CMOs. And today we also have our tech platform, which helps DeFi protocols, social gaming protocols, and metaverse companies engage, activate, and retain their highest value crypto users.
Thanks. Really exciting group. Nice diversity for perspective for what consumer crypto even means. If you've been in crypto for even more than 2 years or 5 years, you'll know that what consumer crypto means changes over time. So I wanted to sort of level set the conversation and ask the panel how they define consumer crypto today and how it's differed from previous cycles or crypto native use cases.
I can start with that. I think in the past, consumer crypto has been a bit of an overgeneralization in terms of, what people talk about the product being used for versus the actual experience of it. In my mind, consumer crypto, put simply, is approaching any sort of experience that the average consumer outside of this, crypto ecosystem that we all work in and operate within day to day, that actually, the regular person actually cares about in their day to day of their life. How do we surprise, delight, and enhance experiences that the everyday person, actually interfaces with on a regular basis rather than something that's, say, hyper-financialized, which is what we kind of more categorize under DeFi?
I think that was very well said. I think our approach to crypto is also very ambitious but pragmatic. So we're looking at what you're already doing on the internet today, which is you shop, you discover, and how is that linked to the ability to participate in the economic upside of what you're doing, not in a financialized way. When we started KIKI, we had 50,000 members fairly quickly on our platform, and most of them initially had no idea that they're actually putting their preference data on chain, which is how we talk about it in the conferences, but they were co-creating products that they love and they were sharing it with their friends. And we had 9 average wallet actions, and they didn't even know that they were using their wallets. And so we're really excited to enter this era where, to your point, everyday customers can participate in the exciting upside that using the blockchain technology unlocks, which doesn't necessarily mean financializing every click, but it means being a co-owner of the data that you produce so that if and when there is an opportunity to financialize, you can do that deliberately, and you can participate in different actions through that.
Yeah, I would agree, but I would take maybe a slightly different point. I'd say that I think what both my other two panelists shared is what a lot of us would hope that consumer crypto would be. But I think that practically speaking, consumer crypto today is people who are in DeFi and messing around with DeFi. And a lot of the other crypto consumer segments, gaming, social, have largely not succeeded in reaching consumers in the way that Caitlin and Jana mentioned before. So I'd say, like, in my mind, consumer crypto is two parts. It's people in DeFi today, and then there are, on the other side, there are consumers who own crypto, but are not crypto native people. And we need to reach more of those people who own crypto, have a Coinbase account, haven't thought about it in 4 years, and bring them into this world that Jana and Caitlin are building.
If I can react to that, I totally agree, and I think the next 1 to 3 years are probably some of the most exciting consumer years because it's bringing those communities together. And I think even today you can see examples of Web2 companies that are getting liquidity through a very light tokens. And I think we're entering this era where this will be happening. So we don't want to forget, and we thank everybody in the room that's been early on the consumer DeFi side. We need you, and we're bringing you exciting projects.
Yeah, I think we're in a bit of a transformative stage at the moment. Totally agree with you. I think I'm speaking more in terms of like idealistically where I see the space going and kind of the transformation that's happening right now. We can talk a bit more. I know we were talking off stage about kind of what, from an infrastructure perspective, has been missing in the past that hasn't allowed us to really see the more end state of consumer products. For Moonwalk, I like to say that we are a fitness product built on chain, not a crypto product that focuses on fitness. And I say that because I believe that informs a lot of the way that we think about every decision that we make to further the product from a user perspective and, you know, what we're prioritizing in terms of onboarding flow and day-to-day usage of the product, how the user interfaces with it, and making that as simple and familiar for them as possible. So I think it's less of putting crypto, you know, front and center, and more so letting users see the benefits of it without making it feel like it's this strange new thing that they're unfamiliar with, which could potentially be a hurdle for adoption.
So, well, we're bringing up a lot of good points here because you do have these different types of audiences and also the way in which we approach them. So let's go with what you just started leading up to, but what shifts have you seen in onboarding and education for crypto consumers? Because, you know, we want to reach everyday people, but do you remember, like, back when you had to be like, welcome to crypto, here's a seed phrase, here are all these things, you have these 16 things to do, and you just, like, had this enormous drop-off in your funnel, right? Things have changed. We have Privy, we have other SDKs that we could use for account abstraction. So for your own use cases, or in whatever way you'd like to answer it, how have you seen this onboarding or education experience shift?
Quite a bit, even in the past couple of years. And it's funny you mentioned Privy. We use Moonwalk, or Moonwalk uses Privy for our onboarding flow. If a user wants to sign in, if you think of, you know, a mainstream consumer that's not familiar with crypto, how are they used to signing into an app? It's with a phone number, with email, with Apple, with Google. Privy allows that to happen. It allows for an embedded wallet solution where the user doesn't feel like they have to go to Phantom or Soulflare or MetaMask to set this up themselves, to get funds onto that wallet to use the product. It just gets them into it and able to actually experience it for themselves, which I think is really important. Historically, even looking a couple of years back, even last year, with some of these products that we've seen, they call themselves consumer apps, but then when you go into the explanation of using the product, it's, oh, well, you need a wallet, and I can help you fund it, but you need tokens, and you need all of these different hurdles to jump over that really turn off a mainstream consumer who's not familiar with it, that's not willing to jump through the hoops. And that's unfortunate because there's been a lot of really innovative ideas and different products that have come out, but they haven't really been easily accessible, where the consumer who may or may not be having their first experience with something on chain is feeling, you know, any sort of familiarity or feeling like it's something simple to get started with when they don't have, you know, any sort of baked in incentive to push through a really difficult onboarding process, which is something that I think building in the crypto space we take for granted. We have this built-in user base and audience of beta testers who are willing to work through really janky onboarding processes, really new green products that are in need of tons of refinement and willing to give feedback. You don't get that sort of forgiveness in the experience from a mainstream consumer, I would argue. So that was missing in the past, and I think it really limited growth.
So with KIKI, we're thinking about this in a very modular way. So today with our beta experience, which is completely non-custodial, you don't, as I said, you don't need to know that you're on chain. And many of you in the room may not like that, but it allows us to onboard any seller. And our benchmark really is it easier to start selling on KIKI than TikTok? Is it easier to monetize than YouTube? And the answer to that is a resounding yes. So from a Web2 from any creator perspective, it's a permissionless commerce. So we're giving you the tools to use the internet. Now, for many of you in the room, you do want to collect your wallet. And so from a protocol perspective, we allow that. So you can experience the economics of our commerce protocol as a crypto native if that's where you're headed, and you can experience it as a completely non-crypto native, and you can be a part of the same transaction. And I think what's really amazing about where we are with all of the infrastructure that got built over the couple of years is that we can build a commerce market that connects the participants with a crypto native and crypto liquidity in the same wallet that is accessible through strictly fiat instruments. And that's why we're excited about the future of commerce and tokenizing commerce with KIKI.
I'd say in terms of onboarding and education, the infrastructure level, I would say, is largely here today. But I would say that the challenge that a lot of consumer crypto companies face is that they have their vision to bring consumers on chain in whatever way that is, but then the incentives for them as a builder is to go play the token launch game, right? And so they go from, we're going to onboard all these people, these millions of people via whatever social and entertainment experience that we're building, and then they have to pivot their whole strategy and messaging to this very small audience within DeFi to get those people to like buy their token and play that game. And I think that these misaligned incentives are actually stopping us from onboarding more like real consumers into crypto. So I'd say that where the level of where the most onboarding, in my opinion, is happening today is on the centralized exchange level. The centralized exchanges are successfully converting people who are consumers into owning crypto, but consumer crypto companies have not yet succeeded in onboarding consumers into this Web3 world that we talk about for, in my opinion, the misaligned reasons of needing to launch a token and target a different audience than they were initially set out to target.
I will offer an anecdote to this. We, with KIKI, we were the first partner for their Smart Pay, which is now has been replaced by BaseApp. But it was very interesting for us. We have close to 100 makers in our app, and when Pay with Coinbase has appeared, which by the way was an incredible experience because it's a biometric pay. So again, you may or not agree with it, but it's the best signature signing that I've ever experienced on chain. And we've had several makers reach out to us to remove it from their product page. So, so even though from maybe user perspective, it's probably factually true that they're the largest one, I still think from, if you're looking at $300 billion of commerce today in the US, not every participant in that is yet comfortable with it. And so again, speaking as a KIKI co-founder, I'm very excited because we can bring those users on chain with their projects relatively more easily than the historical institutions that are obviously bigger today but may not be the biggest tomorrow.
Wonderful. We have about 10 minutes left, so I want to go through a couple of things here. I know that there's different entrepreneurs in the audience, some people raising money, and one of the things, because of all these different cycles, we want to think through like what metrics really matter that you found. Because as you mentioned, Justin, we can go to market and say, we're launching this layer one, now we have this token, but I need developers. Who's this audience? How do they overlap? What's different? And so we go to market with these assumptions. How do they break down? And after you've been through it all, the ups and downs, what do you find is what matters in what you measure for the consumers that you're finally able to reach and retain?
Oh man, I mean, I think you see this more often than not in the crypto space is this perception versus reality of, like what a project may be projecting from an optics perspective or from a following perspective on social media, which can be very easily bought, by the way, versus becoming an actual revenue generating product, revenue generating company that is able to sustain itself. And that's something that you see a pretty big bifurcation between like what people perceive as a good project versus the ones that last, because more often than not, you see people sort of falling into playing a game where they're more so appeasing to the audience that's already there, but they haven't actually converted them to become part of their user base. And they're looking at sort of more of these vanity metrics that don't actually translate to users and retention in the product, which is where the focus should be. If the product is the product and not your, say, token or your Twitter account or, whatever it is that you are kind of looking at that you should be focusing somewhere else, it's very easy to get distracted. And I think that we see that happen quite a bit across different ecosystems in crypto where they're positioning themselves to be building more of, say, a pet project than a sustainable business with a revenue model, which is something that seems very obvious, but you'd be surprised how often that's missed.
So building a commerce protocol, we obviously have a suite of very obvious metrics. With our current marketplace, it's things like GMV and average values. And I think the one that we're very focused on right now is an early seller retention and how they're growing their business, because ultimately through co-creation and ownership, we are generating more commerce for everybody. I think one of the things that was a pleasant surprise to us on more the institutional side, so when we originally revealed KIKI as a co-created and co-owned future of internet, we've heard from a lot of institutions, and our first client is actually Chicago-based, which is Ulta Beauty, with its 43 million monthly shoppers. And one of the things that we've been able to do with them is show that, okay, you can ask people what they want and see if they come back to you more often, and you can reward them for that. And by participating in that kind of pre-purchase engagement, which I know is a very dangerous word because it's not a transaction, it's been a very successful tactic for them to get data and convert them into real sustained commerce. And so on average 11 times a month, people come and say what they want, and they're so excited, and they're maybe not excited to do it for eyeshadows, but they're very excited to do it for their candle or for a scent of their bubble bath. And now Ulta has been able to generate more interest in commerce around those things. And so I think that again, creating participatory data sets with your user base can unlock sort of new economies within where you headed to. And I think we're very early in knowing what all those metrics could look like, and they're pretty project specific in our case.
Okay. Justin, anything?
I think for a lot of the companies, the metrics that actually matter to their protocol are quite clear in terms of the things that drive revenue. But the challenge, as Caitlin was alluding to, is that there are other types of metrics that other people say are important that are not the ones that are actually important to your business, and those are the ones that cast a larger shadow. And essentially what I'm talking about here is, you know what matters to your company, but the exchanges come and tell you, actually what matters is this list of random vanity metrics across different companies. You need to have 100,000 Twitter followers, and you need this, and you need that. And so then founders and marketers are in a bind and saying, well, we see being listed on a tier 1 exchange as like a very strong growth channel for us. We know these other things matter. We don't think that those things matter, but we kind of have to play the game in order to unlock this major growth opportunity. And so I think that that's one of the challenges in terms of like selecting the right metrics, because you most often can't do both. You can't play the vanity metrics game and double down on the metrics that actually matter to your business at the same time, especially given how lean a lot of these crypto teams are. So I think that is one of the biggest challenges of selecting the right metrics today.
Oh, I agree. It's always really funny when people go after those larger metrics, and I look at the use cases for the protocol, and I say, this doesn't matter. This is just sitting dead capital for you. You need actual interaction with your consumers before even considering, what looks good on DeFi Llama. So moving on, we get, there's just such a big world for incentive hunting these days, right? Airdrop hunters, Bankless has Bankless Citizens, where they walk you through different places where you can get new airdrop opportunities. KIKI abstracts out this crypto piece, so I don't know if you deal with this as much, but I'm curious, we'll start with Justin this time, on how do you think about either from a marketing budget standpoint or just incentive design, you want to be able to have a good lifetime value customer, but how do you compete with people who are literally providing a fire hose of incentives, and they get all of the hunters, but you really want to get the core users. So how do you sort of manage that incentive hunger with getting real customers?
Yeah, I think this goes back to the targeting challenge. So I have a background in incentive design in my Web2 life. And for those that are thinking about incentive design, what it usually means is, what is the right amount of money that you need to pay a user to take the action that you want them to take? And in crypto, our incentives, airdrops, are like the most immature version of that. Anyone who's used our protocol, we give them money. Or then that's anyone who's tweeted about us, we give them money. Some combination, points meta launches, they tweeted about us and they used our protocol one time, we give them money. But that's not how incentive design should be, in my opinion. I think that the other big piece, and this goes back to like targeting crypto native users versus everybody else, is, in my opinion, the best people to give an airdrop to are the people who have never gone in an airdrop before. I'm sure many of us on this panel have gotten airdrops from all sorts of companies that we've never used their products of. They gave us like $400 and we're like, that's great, woohoo, now we transfer it to something else. But actually, like, the people who, when they got their first airdrop, they were like, wow, like, I'm like really like bonded to this protocol. I feel like a lot of loyalty towards it. And so I think that as we move away from this sort of like core group of like 10,000 DeFi users to mainstream consumers, I think that we will be able to use a lot of these financial instruments in ways that do build loyalty, but airdrops and a lot of these mechanisms don't build loyalty for a very flighty audience that we have today.
I'm trying to answer simply. So with the data, for example, that we've done with Ulta, we've seen that 91% people prefer participatory rewards to a discount. So if you look at spending $2 billion a year on 30% off or 20% off, that's really impactful to the bottom line. Now, obviously, we're more interested about the generative side of that. So how much more do you buy because you're participating? I think it's art and science. And to draw the Web2 example, that there are tried and true metrics. Everybody's farming points in Web2 and Web3. It is a part of that. But I think making the UX of your participatory recognition as important as the financial participatory recognition is really important. And we have seen that in the data. So I think KIKI is a commerce company, seeing brands and communities create and sell and generate things that people care about. We're about to launch with a California Polo Club, and they will co-create a product, and once they reach their funding threshold, there will be coin. And I think those incentives cannot be faked to a large degree, because there's a group of people that they were going to do it anyway, and now they have a tech stack where they can do that in an upside. And so I think that part of what we're discussing is also sort of a product market fit question on where are you applying this technology to, and what is the market that is actually using this. And I am very excited on our behalf because the bar is really low in Web2 commerce. Like being a power user of any brand in America today is a net negative experience. You get asked to buy more things. What if you get something for it? And so I think the future of on-chain commerce is going to be amazing. The future of DeFi is a little bit jaded right now, but I do believe that with the next wave of users, we're going to get them on through the things that they are really passionate about, and it's going to be a little bit more natural than forced incentives.
Yeah, I going back to what Justin said as well, I think there's a difference between what you see more often than not, specifically in crypto, a lot of more immature uses of incentives in a way that are ultimately economically unsustainable. And what you see time and time again, people have short memories in this space pretty often, but if you look back at some of the biggest airdrops or incentives campaigns, if you look and fast forward to what those user numbers are later on, more often than not, they're quite low versus what they were at that time. And what we see from that is that maybe that's not the right structure for incentivizing long-run usage of your product. And a lot of the time, too, with a lot of the points programs and the way that they're structured, if you're leading with, say, token or alluding to token as your value proposition for the product, you're not going to attract people that are coming to the product for whatever it was originally intended for. The token or the points program then becomes the product. That's a very difficult thing to unwind from perspective of trying to market to the right audience, and then you've just attracted the wrong people, so you're never really able to truly identify if you had product market fit. And later on, when the well dries up, if you're not able to sustain the financial incentives you put in place, then there's nothing left, and that could be just the end of the project, right? So for Moonwalk, I'll keep it short, but we're thinking about this as well right now. Our user base to start with was Solana-based crypto native users, ultimately adding in more of these like Web2 familiar user experience pieces that I think are very important, adding fiat rails, just doing all the things to make it a bit more friendly to the average consumer. So eventually that's our North Star of who our audience is going to be. It's not crypto native airdrop farmers. So how do you appeal to the early users that you have that are crypto native who are very psychologically skewed in terms of what they perceive as enough? We always make the joke in crypto of people complaining about the free money that they get, but that's something to account for because the bar has been put so high how do you compete with the other projects in the space that are just throwing money at everyone when they've barely done anything to, for the project or protocol? So it's a delicate balance. It's something that I don't think a lot of projects do well. And you ultimately see that down the road when they're not able to sustain themselves and their user base drops off a cliff.
One very quick thing on that.
Yeah.
I was just going to say, totally agree with you. And I think that the other reminder here is that the minds of Web2 consumers, that amount of money to drive them to loyalty is actually a lot lower than in crypto. Like, my wife loves Shopify Pay because Shopify Pay, total Web2 product, gives you like pennies on the dollar back when you like make a purchase on anything. She loves it. That's way less than like the $500 airdrop that I got from Barachain that I was just like, okay, cool, that's fun and all. But that is what's driving, loyalty among a strong consumer that lives in New York City.
Yeah, and even just, you saying the $500 from Barachain, I just think also, like, if we go back to regulatory and decentralization, people did these airdrops so they could reach decentralization. It's just how all these different moving parts end up affecting our behaviors at the end of it. But we're out of time, so I'd like to just thank Decasonic and all of the sponsors, as well as my panelists from Safary, KIKI World, and Moonwalk. I went to their sites ahead of time and tried them out. I highly recommend going through the experience. Thank you.
Thank you.